Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
We are just 2 minutes away from the end of the trading day, a Fed trading day, an earnings trading day. Caroline Hyde here, Taylor Riggs with me, counting you down to the closing bell. Here to help us go to the Beyond the Bell is our global simulcast. We are joined now by Carol Massar, Tim Stenovec, bringing together our Bloomberg Television, Radio, YouTube audiences worldwide to, well, pass through one of the crucial moments of the day. Carol, it had to be really the Fed managing to keep that Goldilocks running.
Oh my God, that's exactly what we just talked about with our guests on Bloomberg Radio. It is a Goldilocks economy. Take a look at how the market reacted. We had a little bit of firming in the equity trade following the Fed decision and Fed press conference, but the yield curve pretty much staying put where it was pre-Fed decision. And I agree. I think the outlook, we all know the Fed's going to be patient. They're waiting for their metrics, Tim, to kind of hit before they make any changes in policy.
Yeah, look, it absolutely makes sense because the Fed strengthened its view of the economy, said those recent inflation looked, quote, transitory. I lost count of how many times Fed Chair Powell said the word transitory, not just in the, in the headlines, but during that press conference. But one point that Carl Riccadonna made on our show was that when it comes to thinking about that metric, it's all about those folks who still remain unemployed, those 8.4 million people who are sitting on the sidelines and have not come back into the workforce yet. That's what he's keeping an eye on for looking for economic growth and economic recovery.
And that's indeed what you see within the equity markets, walking that fine line between gains and losses, showing some losses, of course, Caroline, as we head into the closing bell here in the bond markets. They catch a bid. We get some of that migration downwards as we're seeing some growth expectations come back, but we remain in check. We are lower for longer.
It really is a complete round trip from the minute the Federal Reserve announced its press release and then went into its press conference. We managed to push higher on some of the stock markets across the board. We had NASDAQ up about 0.3%. You had a push into the S&P 500, but now we end the day lower, just by 2.9 points on the S&P 500. We've still got to finish up settlement here, but it looks like we're going to close down by 0.1%. The NASDAQ, big tech, down 0.3%, and we're already getting earnings out from some of that big tech. Carol, Qualcomm.
Yeah. Qualcomm crossing the Bloomberg terminal, talking about the second quarter adjusted EPS of $1.90 a share. Folks, that is a big beat compared with the estimate of $1.67. Second quarter adjusted revenues, $7.93 billion. That, too, is better than what Wall Street was forecasting, $7.63 billion. And it's also talking about the third quarter, always key. Third quarter revenue, they're looking for $7.1 billion to $7.9 billion. The estimate out there is $7.12 billion. So, this is what we want to hear, Tim. We want to hear about outlook. Qualcomm, though, you can see in the after hours, investors like it, up 3.7%.
Yeah, they do. And look at that. It's had a rough year so far. The company, of course, makes chips, and it has been trying to increase supply and meet the demand as chips have been in great supply, not just over the last year, but increasingly they're found in pretty much everything right now. One thing to think about, too, when it comes to Qualcomm is any guidance or any sort of insight into the rest of the world where it sells, in China and South Korea, and just a small portion here in the U.S.
And Tim, we continue to see some of these earnings. We've been talking about this talk for a while. Align Technology seeing full year net revenue now between $3.7 billion to $3.9 billion. That is well ahead of the estimates of just shy of about $3.5 billion. So you're really seeing that full year guidance on that revenue, Carol, really come in better than expected. This is also as they've seen improvement in the first quarter as well. That revenue at $894 million versus estimates of $820. So an improvement really across the board.
It's kind of interesting. This is a pre-pandemic play, too. Like, this is a stock that people are thinking about consumer, their own health care, their own personal care. And so this is the Invisalign braces. The stock has actually been doing pretty well this year. We're talking about being up about 16%. It's got a $48 billion market cap. It's as big as Ford, Caroline, which is also going to report earnings after the close.
Hey, braces are big business, okay?
They are.
They are when you've been staring at yourself on a Zoom conference for the past year and suddenly realizing maybe you're more scruffy than you thought. But we await, of course, some other key earnings. Taylor, we're going to be digging into the likes of MGM. We've got the likes of Ford, as we were just mentioning. The key for me, Facebook and indeed Apple at the half-past mark.
100%. We're going to be all looking here at Facebook. I've been just reading some analyst notes all day. Raymond James looking at ad growth up 34% on a year-over-year basis. Also some commentary from Canaccord Genuity on those social audio strategies, Tim, as you've really wondered if this is a push that we've seen just during lockdown, or if this social audio is actually something indeed that can last in a post-pandemic world. All of those, of course, relative to Facebook and the strong advertising that we've seen from the likes of Alphabet, et cetera. Does that see a read through?
Yeah, that's certainly a big question. Mark Zuckerberg himself has been spending quite a bit of time on Clubhouse, actually talking on the app and getting to know the app. Look, a big question I have about Facebook is what it says about iOS 14, right? That's Apple's new operating system. And it's the one that includes the warning. You might have seen it now already about how other apps are tracking you. Facebook has come out against that in a very significant way. But the question is, to what extent does it actually really hurt the company's business when it comes to ad tracking and, of course, online ad revenue. Also, viewing Facebook in the context of yesterday's huge beat when it comes from Alphabet, especially with that YouTube revenue, but balancing it out with what Pinterest said, that we could be past peak social, at least during the pandemic.
And of course, this all moves us towards what's Apple going to say, of course, still the key, most valuable company out there. And they're going to be not only speaking to the narrative that we see of managing to tick the box on services as well as products. What will we hear in terms of iPads, in terms of Macs? Are we all still working at home, thinking of schooling? Will that be sustainable in terms of growth? But also, Taylor, tax commentary. This is a company that's just come out at the beginning of the week to say that they are paying the most amount of tax out there. And this is as we hear from President Biden later today, 9 p.m. New York time, about potentially big tax increases for Wall Street, largely.
I might get in trouble if I say the only thing I learned during my time in San Francisco is the fact that Tim Cook is by far the best big tech CEO, Carol, in navigating the political changes. You had Amazon, Jeff Bezos. Well, Trump didn't like him. But you have Tim Cook touring that Texas factory right after the previous election. And then, of course, you get a signaling with the current administration about, hey, we are the largest taxpayer, $45 billion in taxes in the previous 5 years. How do you navigate those relationships, perhaps getting ahead of that political spectrum? It is all about hardware with Apple. It's all about politics, Caroline, like you said, that tax conversation and how you push that forward, Carol.
Well, what's interesting, too, is, and I think it is about a lot of things when it comes to Apple, but, you know, investors are looking for something to move the stock. The stock has gone nowhere this year, and so investors are looking for something that ultimately gets it moving. Do you want to mention, though, Ford crossing the Bloomberg terminal, Tim?
Yeah, we're keeping an eye on what's going on with Ford. Ford shares closed down 0.6% after a fairly muted session. Waiting on those Ford headlines right now. The company citing semiconductor shortage for an outlook cut, enhanced execution, fresh portfolio of exciting vehicles driving forward.
Facebook coming out big numbers here. First quarter revenue, $26.2 billion, beating estimates of $23.7 billion. Other revenue, $730 million versus estimates of just $454 million. We go down to the bottom line, huge beat, $3.30 EPS versus estimates of a $2.34. You're seeing operating margins, huge beat, 43% versus estimates of 34%. So from what I can see, Caroline, and we'll look at this with eBay, are they managing to increase the cost of those advertisements, put on that pricing pressure, and really see that all the way down that income statement?
Yeah, and we're also managing to pick up in monthly active users, 2.85 billion people in the world using Facebook on a monthly basis. And that's just Facebook, not talking about, of course, Instagram, WhatsApp, some of the other products they own. I'm looking at eBay, second quarter net revenue, 2.98 billion to 3.03 billion. So this is their forward-looking forecast. It's basically slightly ahead of expectations at $2.95 billion. Their adjusted earnings per share, continuing operations, 91 to 96 cents, they estimate. The estimate had been for 98, so that's actually on the lower side in terms of adjusted earnings per share. The first quarter, so the quarter just gone, active buyers 187 million, well ahead of expectations. Gross merchandise volume 27.5 billion. That's ahead of expectations too, but the forward-looking guidance not good enough to move these shares higher after hours, Carol.
Yeah, certainly something that we have to focus on. Going to take a look at also another pandemic play, Grubhub. First quarter revenue, $550.6 million. That compares with an estimate of $509.3 million. So that's a beat on the top line. The bottom line, first quarter adjusted loss per share of 56 cents a share with an estimate of an EPS of 1 cent. So that's going to be a bit of a disappointment. And I think Grubhub right now unchanged here, but this is one of those names that you want to see what happens as the world starts to open up. Are we using Grubhub as much as we were during the pandemic? So this is certainly key and certainly something we'll watch into the trade.
And are we using Facebook as much as we were before? I mean, they're talking about CapEx spend and really wanting to invest aggressively to deliver new and meaningful experiences for years to come. They're talking about augmented and virtual reality. reality. And the shares certainly go higher, except when you scroll down the press release, Tim, one thing that really stands out to me is they're saying that in the third and the fourth quarters later this year, they're really looking at total revenue growth rates to significantly decelerate as they're lapping those periods. So those are those year-over-year effects that they may not see in the later half of the year, but boy, are they still seeing it in the first half of this year, and they continue to invest due to that. Yeah,
I think fair to say that we got a little bit of a preview of this yesterday when it came to Pinterest. However, investors are certainly responding differently, sending shares of Facebook higher by more than 5% after hours. A huge revenue beat, sales of $26.17 billion, growth of more than 47%. Mark Zuckerberg saying we had a strong quarter. We will continue to invest aggressively to deliver new and meaningful experiences for years to come, including newer areas, as you mentioned, Taylor, like virtual reality, commerce, and the creator economy. I'm looking for commentary around how well Instagram is doing when it comes to actually selling stuff. But Mark Zuckerberg for years has been talking about virtual reality and Oculus, and we haven't seen the company deliver meaningfully there.
Tim, that's a really good point. I mean, this is what it's about. We know it's all about online advertising for this company, but this is what investors want to know. They want to know about WhatsApp and Instagram, and people, my daughter, she's 18, that's how she shops on Instagram, and they want to see that, Caroline, contributing to the bottom line.
Regulation as well, which I think is front and center for most of these platforms now, sees high ad targeting headwinds on platform changes, of course, but they're also seeing high ad targeting headwinds on regulatory changes as well. This is a company that sees Apple changing the game in terms of, well, whether you're going to be signing in to be able to see, to be understanding the way in which you navigate, the way in which adverts that you could respond to, but also how regulators might be adapting to that as well. Overall, they see ad revenue growth was mostly driven by price through 2021, but we'll see how they continue to fare for the rest of the year. Hey, Taylor.
You know, there's a raging debate, Caroline, going on about CapEx spend. I was reading a note from MKM Partners saying that some of the big debates around Facebook is if they're going to lower their OpEx and their CapEx guide for 2021. And indeed, they don't. They say $70 to $73 billion for this year. Prior outlooks were $68 to $73 billion. So I'm hearing a lot of that investment spend, that increase in that ad environment, talking, of course, as you mentioned, some of those headwinds around the iOS changes, but they're looking at that not until 2Q.
All right, maybe lots of debate about that. No debate about the share price, though, because it's up more than 4.5% here in the after hours. So we'll see if that carries over into the regular trade today. All right, guys, that's going to do it for Beyond the Bell on this Wednesday. Our cross-platform coverage on Bloomberg Radio, Bloomberg TV, and on YouTube. We'll see you again tomorrow. Same place, same time.